I'll be happy.
Exactly.
Good, we're going.
Exactly. All right, everybody. Welcome to another Trading Studio with Jamie and Steve on today, the last day of March 31st. So say hello to Q2 and goodbye to Q1 of 2016. It's already a quarter of the way gone.
Yeah, some of you might notice, and thanks for showing up today, we've made the switch. On Thursdays, normally we've used that Omnovia platform, but we've decided to make the switch, just be consistent with Monday and Thursday's webinars to use the GoToWebinar feature. So appreciate you guys putting up with that little minor change and finding your way here.
All right, so let's see here. Before we get going, let's just take care of a little bit of legal here. Just want everyone to be aware that Trade Ideas is a publisher, so please do not misconstrue the information that we share with you in these webinars as a solicitation to buy or sell anything, especially a stock or anything of that nature. We just want to make sure that everybody's aware that everything we share with you here today is strictly for educational purposes. So moving right along, we're going to do our thing and talk about, where we've come market-wise, on the main indicators. Getting into a little bit of digestion phase, low volume area, which is only normal considering, what we've been seeing in the markets. And of course, when we do look at the Holly trades today, you're going to notice that there were very few trades, and that jives perfectly with the sentiment of the market and the low activity that we've been seeing. And then we're going to continue. For those of you who were a part of the Monday webinar, you'll know that Steve and I handed out a bunch of limit alerts that, well, if you've been watching them, they've done pretty well. We're going to cover that progress. And then we whipped up a whole new batch for today as well.
Yes, we did.
So without further ado, let me get my screen proper and we can get started here. All right, so first off, how about we take a look at just the market in general, Steve, and pull up the old chart and tell everybody what's on your mind there.
Well, we like to bring up this freestockcharts.com. We're still waiting for our moving averages to migrate into the Trade Ideas charts, which will be a wonderful thing. But for now, just for simplicity's sake, like to call the attention to the 200-day moving average and also the 10-day moving average. When we last spoke, we talked about how the SPYs did their job in breaking above the 200 and then slowly digesting, pulling back to a perfect bounce right off that purple 200 line, and then pushing to a new high, creating a higher low and a new high. However, today, let me just say, we could have set up and gone two ways here. You've heard me mention a scenario called a go, pause, go, which is usually a long green candle or a long red candle, followed by a small spinning doji of a narrow range day the following day. And then if you have the go, if that narrow range second day high is taken out, generally you'll get some more follow through followed by another long bar. That's been an age-old axiom for some type of price dynamics, the go, pause, go, but we did not get that in this case, which tells me it's the latter of the two scenarios. We're going to just be in for some more lethargic, low volume digestion, maybe some narrow range digestion to work out that move that we had pushed back on there. Was that Tuesday, I suppose? And if we go to the Qs, we also kept an eye on the Qs earlier because they were kind of lagging under the 200 days, you can see. And as we last spoke, they were pinned under that 200 day. But following day on Tuesday, we had a nice push up through, and then most importantly, a close above the 200 day, not just a push, wick, head fake. And then the same thing yesterday, a little low volume, not a low volume, but a narrow range, excuse me, a day, and then that narrow range was not taken out today. So both S&P and Qs kind of in that lackluster, apathetic, pulling back, digesting, backing and filling, whatever you want to call it. There's a million different ways to call it, but it doesn't necessarily make for great trading action like we had two days ago in the Qs and the spiders. So, it dovetails really nicely into why we saw such limited action in Holly today. We'll touch on that some more, but, where do we go from here? Well, it's very likely that the Qs may do exactly what the spiders did. They may pull back to the scene of the crime from where they broke out and closed above. And by closing above that level, they basically garnered control of that price action, but no follow through. So I think we're in for maybe another day or two, especially tomorrow being Friday. However, it is the first day of the month, so there could be some money being put to work. I'll give you that caveat. But for a typical Friday, we may just be in for some more digestion tomorrow to try and pull back and find a level where we can find some solid base camp digging in both the Qs and the spiders. And that's what I'm seeing here again. And the flat 200-day moving average is never easy. Makes things pretty tough. I know a couple of really good market technicians that say the things they hate to see the most are flat 200-day moving averages, and they stay away from them. Well, in this case, it's not a single stock showing a flat 200-day. It is the index of our technology, the Qs, showing a flat 200-day. So it really is indecision here. There really is no bias. I'm just kind of nitpicking on the minutia that we have closed above that line and didn't have any follow through. But being a flat 200-day, anything goes. But gun to my head, we're going to just pull back and settle in a little bit, some backing and filling, and look to maybe build a new base camp and try and move higher. We'll see what happens.
Yeah, and these little volume bars tell the story, because today it felt like I kept having to remind myself that it's Thursday, not Friday, because it sure felt like a Friday in the market with the anemic volume that we're seeing, which corresponds perfectly with the low trade count that we saw from Holly today. First off, we only had 6 strategies, all longs, which is kind of strange because usually there's, maybe 1 or 2 short strategies in the mix, but today we saw 0. And by the way, just so everybody sees, basically what I was doing is just getting rid of the little penny strategy that we have on there. So we're seeing the whole hopper except that one. Now, a total of 7 trades today, and most of these guys didn't even fire until later in the day, and of course power hour long only fires in the last hour. So we had 4 in the last hour and only 3 throughout the entire day. Of course, these were low dollar stocks as well, but the bottom line is with this action, things have to be just perfect for those triggers to fire from the strategies, and there just wasn't enough movement, not enough variety out there to get a lot of trades out of Holly today. So once again, a very good barometer when you're watching Holly, those of you who are subscribers to the AI channel, because when she's pulling in the reins, there's something to be said for that.
Yeah, again, mentioning my trader's perspective of seeing lack of follow through yesterday on that go, pause, go. That's just another piece of the puzzle to me as a trader to say, hey, maybe this is a day where I really should be sitting on my hands. Not only are the charts in the S&P showing me a real apathetic, low volume, narrow range pullback, Holly, the unemotional, sophisticated robot, AI engine, for lack of a better name, doesn't take risk unless the odds are in the favor. And so when I see the unemotional AI next to me not doing anything either, that's just a double reminder of, hey, you don't have to push it every day.
Exactly. And when we look at the overall P&L for Holly today, on 7 trades up a whopping 8 cents or 2.86 basis points, yeah, no harm, no foul, pretty much a scratch. But let's take a peek at what you can't see in the numbers here. And what I mean by that is, here I'm looking at the all trades plotter for today. And I'm just kind of sorting by closed P&L. So we can see we had the losers down here, the winners up here, and nothing really jumps off the page at me right off the bat. Now, when I look at these little losses, 35 and 37 cents that were taken, I do find comfort in the fact when I look over here at the non-exit profit column, I see that, okay, good deal. We took our loss. The thing continued to go down. Had we have held it, we would have given up another 40 cents here and another, 15, 16 cents here. So that tells me the stop losses are doing their job. And, had we held these, we would have ended up taking less profit. But then again, we have this guy right here, which this was a very interesting, well, we could have even called a trade around today, because DRWI was triggered here. Holly's like, buy it.
And then it
Whole
expired.
time, got out the whole time, which was on that strategy, the mouse, the whole time is 60 minutes. So 60 minutes later, Holly gets out for a flat, right? However, that's Holly. She just does her thing, exit, exit. Now, if we're traders and we bought it here along with Holly, and then we get this type of sideways action, you know, there's really no reason to get out, especially if you purchased in this bar and you're using a stop loss maybe right here. You know, just because the time is up, you know, we've talked about this, you know, numerous times throughout the webinars. You know, so, you know, if there's no reason to get out or if something is going your way, hey, we just have to put our trader's hat on and exercise, you know, prudent risk management. But that little thing, you know, it was sleepy a little bit longer, and then wham, you know, right at the close, it popped up. So there was 60 cents to be had if you stayed in that position today.
Yeah, and just to remind people, you know, the exit time is a suggestion, and Holly has to get out at some point. But, you know, I will always override that if I have a setup like this where there's no harm really involved, because you can set a protective stop and see if there's maybe a little bit more meat on the bone. Like he took the words right out of my mouth, Jamie did. There really was no reason to get out of this trade other than, you know, Holly's 60-minute time rule. But in this particular case, you could have set, you know, a stop loss for a flat and maybe stuck around a little bit longer into the close and see what happens. And in this case, that would have worked out well. But black box is not what Holly is. Black box is follow the rules in, follow the rules out, automation, no touchy, no trader discretionary involvement. Well, that's not the case with Holly. Holly is an idea generator. So the ideas come in real time, but the exit is what we call a gray box. You know, the exits are discretionary. The time stops are a suggestion. The smart stops, the dollar amount, you know, 37-cent smart stop, you might see that sometimes, whatever those is. You know, those are calculated risks based on the algorithm of the particular stocks, pensions for volatility or average price movement within an hour. You know, all those things are calculated and optimized. But the point being is the exit is not set in stone. You can exit early if you don't like the trade, or you can stick around longer on a trade like this that really didn't have any harm setting up for maybe taking it into the close to see what it had to offer. So, you know, Dan always tries to remind everybody, and he's correct, this is an idea generation. This is not a black and white in, out, black box. This is a gray box idea generator.
Right, of high quality information. And I'm glad you touched on that, Steve, because you know what? A lot of people, you know, when they first might start watching Holly, you know, and the good news is you don't have to take it, you know, you don't have to follow any advice because it's a learning tool, because it's a statistically based system, which is very alien to most people out there. And, you know, most of the times when you start watching a statistical system and all you've ever done is been a technical type of trader, a lot of the times the patterns won't jive with what you think is a good pattern. This one's a classic little, you know, range break here, range break here, of course, butting up to the close. But a lot of the times the patterns will look, well, how shall we say, alien, right? So it's a learning process. Getting to know this system is just like getting to know an instructor. And, you know, the best way to interpret Holly is you've got a trader sitting next to you every day that trades with perfect statistical probability. Well, perfect might be a little loose of the term, but very high probability. You know, perfect probability obviously would be 100%. You know, we don't find that in the marketplace. I mean, it's you know, it's even rare to find things that work 90% of the time, you know. So, you know, as we can see from our strategy hopper today, you know, these guys are all coming in anywhere between 66.7, and this is typically the lowest win percentage factor that you'll ever see in one of the Holly strategies. So, you know, a lot of the times we're at the mercy of the market. You know, if it's an inside day, sometimes those days can be, you know, better than the days when we have, you know, a wide range. So, you know, not going to spend too much time on Holly today because she didn't really produce that much, but we always like to reiterate the fact that, you know, the way we design this system is not as a black box system, you know, gray box maybe, Maybe you take the trade, maybe you don't. But the bottom line is it's an extremely high quality information stream that if you watch it every day in, day out, you will learn from it. And hopefully, eventually, that knowledge will turn into trades. And we all know what the byproduct of good trading is, and that's money.
Mm-hmm.
Okay, so moving right along here. Thanks for making an appearance, Holly. What we're going to talk about first is, for those of you who were in the Monday webinar, what we did is Steve and I walked through a bunch of the trend change lubricant setups. And what we ended up doing was creating a list that we handed out to everybody in the webinar that they could add into their price limit alert window, a collaboration link. So right here, we can see on the 28th, which was Monday, these were all of the limit alerts that went out that day. And so here we are, 3 days later, Tuesday, Wednesday, Thursday. So how have those limit alerts done? And so the ones that are highlighted right here, you can see 28th, and then the ones down here are the ones we're going to share with everybody today. So first we're going to go over how did the ones from Monday do, and then we're going to go over the new setups. And then we'll make sure we make this link available to you guys so you can just, use that cloud link to add it to your existing limit alerts. All right, Steve, I guess we start at the top.
Why not?
Okay, so.
And this is sorted by, price cents triggered. Okay, so this is the best one of the bunch.
Right, the best one.
Cents trigger. Okay, yeah, I've got a lot to say about this one because we're going to have a chart that's later coming up in the watch list. But here's what I really liked about this, and I was discussing this with Jamie. You see, there's numerous points to start off with. There's numerous points that line up on there on the pivot level, going all the way back to early January, and then 2, 3, 4, a couple more wicks here recently in the last couple weeks. But there was a nice, tight, higher-low dynamic building. In other words, we didn't spend 2 or 3 days of long candles getting up to that price level and then expect to still have enough oomph and energy to push through it, because we'll have an example of that coming up. So, but in this case, these are the ones I do like. This one is butting up against that price level, or it was, I should say, and we identified it. But the low end was really tight. There wasn't a lot of energy expended getting up to there. It's expended a little bit of energy, then it butted heads with it a couple times, and then it went through. The third or fourth time was a charm. Rather than finding these levels that are obvious, but the prior 3 days, imagine if those 3 green candles there were underneath our alert, because that'll be the example we have coming up later. I would not like this because all the energy was expended getting to the alert and it has nothing left by the time it gets there. But in this case, it's the opposite. It had a lot of nice tight wedges being formed, a lot of good attempts that were failed, but eventually the strength gathered and the potential energy increased and got a hold of itself and was able to push through, close above, and more importantly, follow through a couple days. That's the poster boy trade right there that we're looking for, something that you can sit in for a couple days, not get out and leave anything on the table, because there's so much pent-up energy there with that type of action butting up underneath the alert level that when it does go through, you're going to have a better probability of follow through, closing on highs, and following through the following day. And again, like I said, we'll have an example of the opposite coming up later and how we would handle that, but that's my 2 cents on this chart, and I'm really happy to see that it went. I hope some people participated.
Right, and just to refresh everybody's memory, or for those of you who might be joining us for the first time, all of these patterns on this long-term chart like this are being generated by our trend change lubricant top list window. And we can go into the inner workings of that maybe a little bit later if we have time. But this is what we look for. And what I'd like to point out is the simplicity. That's the beauty of these trades. They're on the daily. So, we just look for the ones that are, for lack of a better term, the prettiest charts, the cherries of the bunch. This was certainly one of them. It worked out extremely well. That potential energy bubbling up down here, I guess we could say it went kinetic on us, and then boom, boom, boom. So that's the best one right there. It's up $1.70, right?
Yep.
Now let's just cruise on to the next one, MPG.
Kind of the same thing. You know,
Mm-hmm.
didn't really expend too much energy again. Now this one probably could have gone either way because it had two really nice green candles. It could have either, maybe made another attempt to pull back and try, but this one went through. It found its lubricant, as we can say on the trend change here, and it did follow through. But once again, not a whole lot of energy being spent getting up to that level before the sideways consolidation and reattempts to push back above go. But when you get those, don't get out too early. And if you feel you've got to get out, sell a third, sell a half, but leave some on the table to enjoy what might be on the residual side, because these are the kind of trades that are meant to have some follow through for more than just one day.
Absolutely. All right, next on the list. Boy, this one was pretty. I still like this a lot. Abco.
Yeah, it's a slow mover, but it's doing what it's supposed to. Look at those tight 4 or 5 days of ranges there, right, resting nicely underneath that level. Once again, it didn't spend too much energy. Got its move 2 days ago, and most importantly on that move, it closed at highs, didn't wick and pull back down into the zone. So I anticipate this to continue to kind of creep higher until it fills that gap that Jamie just highlighted there.
Right, and that's always that's always a nice added benefit is when you have that little void there with no
Gives you an easy profit. Gives you an easy profit target. Yeah.
Absolutely. All right, so that one's currently up 97 cents, and these positions could always increase tomorrow as well, depending on what we got going. EVER,
Just
real nice.
Yeah, more of the same. Didn't expend too much energy. That's why we put the alert above, not an alert for pullback. And it got its 2 or 3 days of movement. Looks like it might be stalling out a little bit. It didn't take out yesterday's highs. It was not able to make a new high today. So, this one may creep around and digest a little bit. If I had been along this one, I probably would have sold at least half of it by the close of today because of the way it looks. I don't want to stick around for the low volume digestive pullback to test the breakout, which is what it might be doing. So at least, when you sell half, you can take half off and get going.
Right, and I'm going to zoom in here because this was our entry candle. So when Steve and I looked at this, it had already popped its head above, right? So this was one that came back down, and we can note right here, this was a pullback fill. We weren't chasing it to the upside. It had to come back to us. So we're like, okay, this one looks good, but we don't want to chase it. So when we put that order in, they backed it up, took that wick, and that's when you get your fill. No chasing. All right, so that one was, that one's currently up 38 cents, and now the VRA. Now this one was a little bit different, Steve.
Yeah, let's take a look at VRA. This one, oh gosh, I thought it closed better than that. I guess I didn't take a look at the closes like I should have.
Yeah, it gave back a little bit at the end there.
A little bit there, but this one has a little extra special sauce in it. There is a 55% short float in this one, and you guys have heard us talk a lot about the short squeeze opportunities. Well, a lot of times we're looking for the short squeezes way down near the base or the low of the stock, but this one has been frustrating the shorts for a couple months now, and it's getting up here to a level to where if it wants to make a new high, you're really going to want to re-examine your position as a short seller holding on to this as a loss. So, this type of chart, looks like many other charts out there, but the reason I liked it so much is it did have a really nice potential energy of short float built into this. So that the thinking being that the follow-through will come through on the fear and the pain of the short sellers trying to bid and buy to cover to get out.
Right. So another one to keep an eye on. And so now we're going to be getting to, okay, so first I just want to point out that on the 28th we generated 9 plays, all right, so we can see, or the 28th. So here's where they stop and where today's will begin. But you can see out of the 9 plays, let's see here, 1, 2, 3 did not fire. So we've still got, actually 1, 2, 3, 4, yeah, okay, 9. So 3 are still working. These all triggered in between now and then, but these are still working. So let's talk about the 1. So out of the 5 that fired, 4 of them are in profit territory.
5 of them.
1, 2, 3, 4, 5. Yeah, 6 fired, 5 are in the money. This one's barely. And then the one that is out of the money.
It was kind of a different setup.
Yeah, it was a little bit different.
Yeah, let's zoom in just a little bit. I really liked those 2 wicks a couple days ago that kept showing good buying at the close, popping back up, downside wicks. So I like this space, the agriculture space. I've seen some other agriculture stocks doing well. And it was worth a decent risk reward entry, because if you were one of the people that tried to chase it up above and then didn't have any good risk management or stop losses, then you had 3 or 4 painful days of pullback. And so when we talked about this on Monday, we talked about a chart where maybe we could play off somebody else's pain. It was kind of a head fake breakout and then 4 hard days of pullback, but I liked the way the stocks were closing up. The stock was closing up those 2 days in a row there. So the alert was put at the high above that candle, and it triggered, was in the money for a little bit, but looks like it rolled back over, and it's probably getting pretty close to a stop loss, which I would say would be the bottom of those 2 tails there.
Mm-hmm. And of course, it's not over yet. So let's take a look at some of the ones that did not trigger from the Monday batch.
And not only that, let's see if we still want to keep them working. Okay.
Right,
Yeah.
because this one was from above. We wanted to get this on a pullback, and as you can see here, it never did. But it might make some sense to just leave it live,
Yeah, I agree. Let's leave that one live as is. It might be another day and a half of good pullback, and then maybe we'll trigger. And then again, these types of alerts are trying to play off of other people's pain. Look at that. Let's count how many bars there are from the bottom, green bars. 1, 2, 3, 4, 5, 6, 7. So if you're the guy who chased the 7th bar, I hate to say it, but you kind of probably deserve to have that lesson given to you. And so if we could play off those people's pain and maybe catch them at their stop loss because they can't take any more pain, that stop loss area for them starts to make a lot of sense as an entry point for a new long.
Yes, indeed, and that's the whole point of playing a pullback entry. You don't want to chase it. It looks good, but you have to resist that urge. Same thing with this little guy right here, ISLE. It never pulled back, and it hasn't come back to us yet. So maybe it will, maybe it won't. But in the meantime, we've got 5 winners and 1 loser. So it's just about setting these orders up, because if you don't have the orders out there, you can't participate.
Well, a quick time for a question that jumped in here. Are you getting these from momentum volatility indicator screen scans? We're getting them from this window that Jamie showed a little bit earlier, and if we have time, we'll delve into some of the philosophies behind the filters and the settings in there. But it's basically looking for stocks that are down in the 1/3 area of their 52-week range, but getting ready to make a 20-day high, or in some cases a shorter-term high, thus trying to break a trend line. And if you sprinkle in some short float, high short float percentages in there as well, you've created some additional fuel for a possible move upwards. But that's where we're getting this particular one. And I'll actually go ahead, Mr. Basu, and I'll drop this cloud link into the chat window. The question and answer window that we're using here to communicate, I don't believe, matter of fact, I'll just do a test while we're doing it. You guys can tell me if that works or not. I'm going to highlight the cloud link for the trend change lubricant factor, we call it. And if you're able to click on that link or share that link in the question box, let me know, because otherwise I think it's going to have to go to the chat window, because the chat window will allow the use of live links. So let me just go ahead and reply to you to everybody. I'm sending all there in the questions. And if somebody will let me know if that's actually feasible to use that link in that window. I don't think it is, but I'm going to go ahead and drop it in the chat window.
Yeah, let's drop it in the chat as well.
Yeah, but I do want to know if it is, just out of my own curiosity. So the chat window is available to all you guys on the toolbar there. It's now in both windows. So if somebody lets me know that you're able to use that link.
To answer your question, Max, if you're referring to the trend change window that I just briefly popped over here, I personally just eliminated some of the columns. That's why it might look a little bit different, but the inner workings are the same. I didn't change anything on the filter side. So I just eliminated some of the columns that I don't look at, but it's the same thing.
Great.
Okay.
It looks like GoToMeeting does support that now. That must have been a new upgrade, because in the past they didn't. So I appreciate you guys letting me know. We can use the question box here to put live links in. Thank you.
Most excellent. So the last one for Monday's batch is the CTCM up here, which has not triggered yet. So it has to pop through this line that you're seeing right here. But keeping in.
That's a long battle line there.
That is. Look at that thing.
That's a long front line.
Uh-huh.
Which.
But hey,
yeah, go ahead, say it.
maybe the more potential energy builds, right?
Yep. Yep. All right, so where were we? We were on the ones that didn't trigger and whether or not we wanted to amend them and keep them in the working condition. Did we hit all of them or
Right.
did we stop on one?
Okay, so that's all for last week. Now
Great.
let's look at the new ones that we added today.
So these are ones that we found today, and trust me, I know somebody's going to ask, and if you have the price alert functionality, just to remind you that window that you're looking at here, the price alerts is a component of the higher functionality at Trade Ideas under the AI backtesting one-time lifetime license. So if you don't have the AI backtesting one-time lifetime license, you don't have access to these. But for those that do, the beauty of it is shareable. So what we're going to do is go through some stuff that we looked at today, some fresh charts, talk about the reasoning and the methodology behind why we put the alerts where we put them. And then for those that have the ability to receive the collaboration, we'll drop the link in the window just like we did. So you can
Yep.
have this working price alert on your system as well and be triggered and notified at the exact same time that we are.
Right, so I just went ahead and dropped that into the chat window. So for those of you who have it, you just load that cloud link up and it'll be added to your price alert windows. So first on the block, this little guy right here, CEQP. So I'll zoom in just a little bit and we'll show you exactly where the limit alert is right there.
Yeah, this one, you know, it could go either way because it's expended a little bit of energy getting up there to that line. It hasn't really consolidated a whole lot under that line, but that's not to say you have to write it off. I would just say really be aware of the price action on this one. In other words, if it breaks through and then rolls back and goes to lows, I would discard it quickly because it's probably going to turn out to be a tail and a wick running stops above there, only to pull back and regroup for another attempt.
Very good. This is an old, I recognize this stock from I used to trade so many shares of that stock in the old days.
What did you call it?
But it wasn't, well, I can't repeat those words here, Steve.
Sometimes we get funny pet names for certain stocks, and when they don't behave the way they want to, they
Now,
get nasty
a lot of
pet
people
names.
call it, Shapiggy, you know, but then a lot of other people called it different. Use your imagination based around Shapiggy. Okay, but anyway, Shapiggy wasn't at 180, 170 bucks back then. I think it was like, I don't know, it was not near this price. But anyway, you can see the lines that we've drawn across here. And this one is a pullback fill, okay, because we're not going to chase it onto these, you know, today's highs. Back and fill, no chase, as Steve likes to say. Go, pause, go, Steve?
Yeah, go, pause, go.
Yep.
Better than thrust, pause, thrust.
Go, pause, go. So this one is, we want it to come back to us, get a little back and fill action. Now this IILG, really pretty.
Oh, yeah.
You can see, you know, those of you who are kind of new to this, once again, this pattern looks
Vaguely
not
like
identical, but everything's going to be basically the same.
and a lot of them are shaping up to hopefully become inverted head and shoulders. You know, it's, you know, higher low, lower high, head and shoulders upside down. So this one is nice because it's got a nice little base that it's building very close to underneath that alert line. We're not expending too much energy to get up to it. So in that case, I would expect hopefully a little follow through. But again, if these alerts trigger and then you get to the end of the day and you're 10 minutes from the bell and they're rolling back over and looking like they're going to close on lows, putting in a giant wick through that alert, I would ditch it before the close, before they even get a chance to rape you on the open the following day, because that would be a failed move. You want to see these things close on highs, and I'm pounding my desk and things are falling off my desk as I said that. Close on highs when they break through these price alerts. If they wick after trigger and pull back and close on lows, it's a fake out. Don't fall for it. It's a trap.
Right, and so also too, it's the, you know, there's always typically, if it's a real move, there's going to be a lot of volume behind it. So, you know, very basic things to pay attention to, you know, if you're actively watching these types of plays.
All right, what's next?
All right, we got Hero.
Oh, okay, and this brings in a new topic that we touched on this morning, Jamie and I. If you guys recall, look 3 weeks ago, look at all that lovely volume. Look at all those lovely green candles, those trend change lubricants popping, probably a lot of short sellers getting out, getting smoked. But the point is here, that was a group effort in the energy and gas, utilities, gas, energy, anything having to do with that, mostly energy. But I think they are getting ready for energy round 2.0. I think that as a group, they may be shaping up to try and make another push. We've had a lot of these charts in that sector that look very similar, have pulled back and built a base camp higher and regrouped, and I think may be ready to push higher. So there's a little extra in this one, knowing that we are in a space that had a really nice move early in March, and I think that space, that sector, is ready for a secondary move. And so that one being, what is this? This is her hero. Yeah, we've got another one we're going to show too. But I like that space. I like that sector. So that's giving me a little bit more positive bias on that one.
Right, and I think we've all been around long enough to know that oil's not going to stay down here. Of course it could. I'm not saying it couldn't. Now the probability of that happening I think is pretty slim. So, you know, if the company didn't blow up or the CEO didn't drive himself at high speed into a brick wall in his luxury car, and the company is still around with, you know, decent fundamentals, I think there's a ton of upside potential in a lot of these oil stocks, you know, in the future. All right, so this one just looks yummy to me, Steve. The Dynegy.
Dynegy, yes. Again, the same space, energy. I think energy might be ready for another push. That's just my personal opinion. It's not showing up on the charts other than to say the nice base that these energy stocks have built without giving too much back. You've heard me say price can consolidate two ways. It can consolidate over price with a pullback, or it can consolidate over time, and I'd rather see the latter. Price is consolidating over time, moving sideways in a sideways digestion pattern. That tells you that going forward, the next push still may have a good amount of energy behind it.
Absolutely. And these next two, they're going to be, you know, waiting for the fill, hoping it pulls back a little bit. So here we have ETP, which is also energy.
Yeah, we kind of missed this one a little bit late. I would say this one could go either way, but rather than try and chase after, what is it, 1, 2, 3, 5 green bar days, in my opinion, that you know, yes, it closed near highs, not on highs, but still has, you know, 5 days of movement underneath it. So it's kind of on the fence for me here. And rather than chase, I would rather err on the side of caution and look for a pullback, which could be at the scene of the crime of the breakout. Future support, you know, was prior resistance in that case.
Indeed. This is also hoping it pulls back a little bit. And the nice thing about these is if you don't get them, no big deal. There's always plenty to choose from.
Yeah, same philosophy. And I'll also point out the candles there on the wicks. You know that every time this particular stock rolled back over in the last 3 attempts, he had a nice wick at the top of the move there. And so this is kind of the 3rd time in a row we've seen that, especially after 1, 2, 3, 5 days of green candles. A little bit of wick like that on the close. I'd be exiting this position on the close when I see that that's how this one is going to close, because it looks like it's ready to give some back.
Right, and by the way, everyone, I just want to, you know, make sure everybody's aware that this line that you're seeing right here is the price point. It's very easy, once you have access to the price alerts, to just right-click on your chart, and boom, you can create that price alert very quickly. You got your line show up. You know, if you ever want to change the price alert, you don't have to go in here and edit the alert if you don't want to. Because what you can always do, let's see, make sure I put it back on the same one, 2833, is if we remove our crosshairs, we can just grab that thing and slide it around. Oh, we want to move it up here, and you'll notice it changes my price down here for me. So, of course, I want to move it back down to 2833.
You know, Neil is asking a good question.
This is the hard part. Yeah.
Neil is asking a good question. Where was it? For these plays, does it make sense to look at moving averages as well? Yes, it does. And we're saying
it's something I was going to bring up here as well, Steve. I'm glad you said that.
Yeah, well, I'm glad. Thank you for bringing that up, Neil. I've talked a lot extensively about the 10-period moving average. I like to see these stocks above their 10-period moving average, at least.
Yeah.
And that's what you got on that yellow line. And when they start to, you know, stray a little bit too far away, then I get a little bit nervous. But to me, the perfect setup like this is one that's been going sideways, starting to peak a little turtle head up, but you can see that yellow 10-period moving average starting to really force the issue from the underside of the candles. I would never buy these setups where the price is underneath that 10-day moving average. I want to have that 10-day moving average with a current behind me or a wind at my back.
And all of these limit alerts from today, they all look just like PEB on that 10-day. Okay, so this next one, JMEI, a little bit different of a play because Steve and I were sitting here talking and we're like, well, it's definitely thinking about what it's going to do. So is it going to pop to the upside? Maybe. Is it going to pop to the downside? Maybe. So what we're doing here, you can see I've got two separate orders set up and we call this a bracket. You know, if it goes down here and pops these lows, we're going to get short. If it goes up here and pops these highs, we're going to get long. So, you know, that's what we call a little bracket order right there.
Hey, somebody's got a good question. Susan's asking about she's having an issue with getting a sound with the alert window. Let's maybe make sure she's configuring her sound correctly to alert of that.
Yeah, sure. Are you talking about in the price alert window or an alert window? Because if it's an alert window, we'll cover that towards the end of the when we're wrapped up with this stuff. So yeah, it's real easy. Real easy to do that, Susan, so we'll make sure that you know how.
Okay, where were we? Sorry.
Nothing, I was just pulling up TRTC real quick. Gentleman was asking a question. TRTC. No, that is not a
Oh,
ETF.
that's a penny stock. That's a 420 penny stock. I think it definitely
okay,
showed some action.
Cents.
Yeah, and last night, you know, it didn't have that candle drawn last night. It went a little bit lower than where it went last night. Those are tough, and I remember Dan's explanation is, you know, the volatility has entered the building on this one, and so it makes things overshoot quite a lot and be a lot more sloppy. But that's not to say I don't like what I'm seeing here. It could be the beginning of something, and today could have been the base with that nice tail closing off of lows. But this is a stock that people, you know, need to be aware of. Their pink sheets, their over-the-counter penny stocks. But you know, it could be the beginning of something. But what you don't want to be is that guy that's buying up there above 40 cents after 3 giant green candles in a row, because they can come back to earth so quickly, and then just eventually you're looking for that base building and that calming action of where it looks like it found itself a base and a place to root and start again. But it's too early to tell at the moment for me, honestly.
Absolutely, and you know, hey, here's our pattern again. I would have much rather just been long here.
Exactly, good point.
Go, oh, do I get out here? You know, trying to trade something like that is, well, it looks really sexy, but you know, trading convergence to the mean or trying to catch bounces or call tops, you know, it's a pretty hairy business up there. So, you know, once again, path of least resistance, simple is better. You know, keeping with the trend change lubricant. You know, if you were in it before the big move, great. But, you know, depending on the types of things that you like to engage in, you know, not my cup of tea. All right, so this next one right here, Steve, I like this one a lot as well. The X's. Texas without a T.
Yes, many attempts at that level. And look at not only that level, you hear me talk about prior support becomes current resistance, prior resistance becomes current support. Look at that line drawn way back in November, October. You can see that was a support line. But it just so happens that now it's our resistance line because that line was created off the most recent candles here. So you can see the anatomy of a pivot point. If you hear somebody use the word pivot, well, it looks to me like 687 is a real pivot in this particular stock.
Absolutely. Okay, so we got 2 more to go. Here's ICPT, which looks very similar to some of the other ones we've, you know, targeted today, and that's the theme that's working here. You know, coiling up nicely.
Yes.
Didn't have too crazy of a day today, but, you know, a lot of these could trigger tomorrow if we get that little gap up and then a slow grind up. And then of
You know
course,
what we forgot to do? There's a couple in here that have some really nice short float percentages. We might
yeah,
need to
we're
remind
gonna get to
ourselves of
that.
that. Okay.
We're gonna look at GBT,
Okay.
and then I'll pull over basically a little top list window that I created, which has all that stuff. All right, so this is the last one here, Steve. GBT. Once again, it's got a little bit of room to go, but 1586 up to 1805. It might take it a couple of days.
I'd rather see it creep up slowly and congest under that line and then push above than have it try and break out now after, three green candles behind us. And again, the theory being it's going to waste too much energy getting to its resistance level to break through with enough inertia to follow through for a few days, in my opinion.
Sure, sure. So now what we've done is we've taken a little top list here, and what I did here is I just created a little custom list that this, window's pointing only to the new plays that we've inserted into the limit alert window here. So the interesting thing, what Steve and I want to see is, okay, out of all these plays, let's organize them by short float here. So Hero at the top of the list. This little guy, if he does pop and get some momentum, then 43% of the float, pushing 44% of that float is short. And if you're a short seller and you've been short all the way from here, or even here, or here, or here, and once it starts doing this basing, well, then that's when the shorts start to take their profits, or they start to get real nervous, right? And when the buying kicks in and gets above those levels where the shorts have to cover, then it's almost like a double effect. It could be a doubling, a tripling, a quadrupling effect, but those stocks seem to react a lot quicker when there's a large short float and all the shorts have to cover, and you combine that with all the natural buying, it can make for some really good pops to the upside. So Hero and X is top two out of that list right there. And interestingly enough, you can see that all of these stocks, with the exception of two, closed, in the upper 50 percentile of the range, and some even very close to their highs for the day.
All right. Was that the last one?
I believe so.
Okay. Well,
the GBT was, yeah. Mm-hmm.
Yeah. How do you tell others? I'm just reading a question here.
Right.
I think we were going to circle back for David's question about kind of identifying more what this trend change lubricant TI alert window, or top list window as we call this one, is actually searching for. Hopefully
right.
that answers your question.
So yes, this is the list that's generating all of these stocks that we're talking about and adding in the limit alert window. So I guess take a little peek at the configuration here. So there's a lot of columns up here. And as I said earlier, I took a few of mine out, but of course that's all up to your individual taste. So when we look at the filter set, it's not extremely complex. What we look at here predominantly is where the stock is in its year range. It can't be any higher than the bottom 35th percentile. So that's what this little guy is doing for us. Has to be a little bit of a, can't be too big of a gap up. In this case, we're looking at a 3-bar max gap up, and this is referencing 15-minute bars. A little bit of volume. It's got to be up a little bit from the prior close. And then it has to be in the 99th percentile of its 20-day range. And so, that's pretty much it.
Yeah.
It's not rocket science.
It's two layers. Two layers of time frame. The first layer is the 52-week layer, which we're sending down to the bottom third. The second layer is a trailing 20-day layer, and it's 1% away from making a new 20-day high. And that's about as simple as it is.
Right. And, a little tweak we've been applying recently, which actually I think Barry, who is our resident trader and also moderator of the TI stock trading room, did a little experimentation, and he went in here and he changed up, he took away the 20-day range and said, okay, if I come over here and install the position in 5-day range and do the same thing, will I find anything? The answer is yes. You might catch them a little bit earlier, right? So, you could try the same thing with the 10-day, the 5-day. You never know. until you go on that data safari and see what kind of big game you might be able to bag while you're out there. Then once again, we can always sort by short float or any other metric that we think is, you know, hey, Steve, notice how the shack
Yeah.
short float is
Yeah.
coming down?
Yeah. Yeah.
Right.
Yep.
As the people cover.
They're squeezing
Of course,
it out. Yeah.
Shaq's had quite a roller coaster ride as of late. But, you know.
Can you go back to the configuration of that window? Because do we have a position in 50-day range?
You mean, well, no, not here. I don't think we have.
Position to be position in range, position
So
in
we got
20.
the 20,
No.
we got the year,
No,
lifetime.
Yeah, I'm trying to answer a question. Is somebody saying if you wanted to use a 55-day breakout instead of a 20, it would have to show up on this particular filter set. So 20 is the one that we're using. Maybe at some point we'll have a 50, I'm not sure, but these are the ranges we have to work with right now.
Yeah, and a lot of times we can, if the value you want falls in between what already exists, we can customize and make a custom filter. But since 50 is outside of 20, it's not readily available right now.
Interesting question. Can you turn off the alerts for the first 15 minutes of the market?
Well, you can do this, for example, and this will be a good time to answer the other young lady's question about attaching an alert sound to an alert. So, for example, if I just go new alert window, which for my default it just pulls up a turbo breaks down. Let me do this real quick. Okay, so first off, let's address the question of how do I attach a sound to an alert window? And I'm just curious why I'm not getting any history. Okay, there we go. All right, so to attach a sound, what we do is we come to Properties and we go to Actions. Just check this little button right here. And then what we can do is click Setup Sound. So these are all the canned sounds. So you just pick one, and as soon as you click OK, then that sound is now attached to that window. So every time a symbol comes across here, you're going to hear that sound.
Okay, Richard, he's asking in the same for the price alert windows. It's the exact same drill. Right click. Is it Actions?
For the sound? Again?
No, I'm sorry. For yes, it Actions. If you right click in the price alert window, Richard, right click, Actions will bring up this exact same sound panel for you that you're seeing Jamie demonstrate for an alert window. So I think that was your question. I did.
Right. Well, there was a question about can you not make the alerts fire in the first 15 minutes of the market, right? Was that the question earlier? Can you turn off the alerts for the first 15 minutes of the market? Well, you can, or you can tell your window, don't show me anything for the first 15 minutes, and we've got a filter for that.
That's what I was thinking of.
So if we go to the time, if we just type in time,
Mm-hmm.
and we say add filter,
That's the one I was thinking
then if we
of.
want to know what we're doing here, we hit the show me icon right here. So we can see here, if I put a 15 right here,
Yep.
the alert occurred at least 15 minutes after the open. So if you add that setting in your alert window, that window will be quiet until 15 minutes after, and then it'll start spitting out the alerts that trigger for it. Easy peasy.
So yeah, Richard, it will work on the price alert windows. You can right click on there, go to Actions, and then you can designate the kind of sound you want to generate when you have an alert. But keep in mind that it's defaulted to actually have the window pop up on top of all the other windows, so you do visually see it, and there's like a kind of a glowing row to show you which alert was that triggered. But
right, if you have this button checked right here, it'll actually bring that window to the forefront. So
okay.
You can not only hear it, but it kind of gets your attention as well.
Didn't realize that. I thought it was defaulted. So we're learning this stuff as the new versions come out day by day. Trade Ideas really does innovate quickly. We have a very lean and mean development team that is able to pump stuff out pretty quickly, and sometimes it's hard to keep up.
Now, Lee is asking an interesting question, so I'm going to do this one, and then we're going to be running out of time here, so we're going to have to talk about some of the coupon codes. But the question was GNCA. So if we pull up GNCA on the charts, asking about what type of alerts could he have perhaps used to, to catch this move here. Well, as soon as I see this, looking at this being the opening 5-minute candle, and drawing that line straight across by doing this. This is where I would have liked to have seen it. Now, that probably more than likely would have come across if there was a lot of volume in this bar, if it was meeting the one-time or the 1 minute volume criteria of turbo brakes. It's breaking out of here, it has to hit a high. However, you've got a lot more scientific way. That's just me and my brain and recognizing what I like to see. But this bar right here is definitely probably the most crucial bar. Now, we could easily say, let's find this pattern, which that's got NR7 written all over it, or a consolidation, right? So I know just from my experience, NR7 would have been all over here. But let's say we really wanted to pick apart this bar right here, which is the 1130, so 2:30 Eastern. This brings up a very good time to show everybody a cool little tool that we've developed. So here I am at the Trade Ideas website. I'm going to go all the way to the bottom, and this is where you can find all the topics. And so over here under the traders area, we have this little thing called stocks like this. So GNCA is the symbol. Make sure we're on today's date. Now, if I wanted to see everything that went on in GNCA through the eyes of the Trade Ideas servers, we take this 5-minute bar, which encompasses 11:30 to 11:35. Of course, that's Pacific Standard Time. So 2:30, which is 14:30, for a duration of 5 minutes. Now, I can look back 30, 60, 15, but I just want to see, well, what alerts fired for GNCA in this 5-minute bar. So I hit the button, and now look, this is the list of alerts that actually fired for GNCA during this 5-minute bar right here, and it's ranking them by frequency. So in that 5-minute period, GNCA 1-minute volume spike was triggered 64 times. So that answers my question. I'm sure it came through turbo brakes. These guys right here, you know, these aren't really, I guess, what we would call offensive alerts. They're more for risk management. So when I see these guys at the top of the list, I just kind of discount them. But you can see VWAP, positive VWAP divergence fired 9 times, so forth and so on. So the bottom line is this. I know that when I was brand new to Trade Ideas back in 2002, or anybody for that matter, when you see this, you're like, okay, well, I think maybe this alert would have fired, or it's basically like guessing. Well, now you can go get it right from the servers. So these are the alerts that fired. There's no guesswork anymore.
Reverse engineering.
And now, when it's done showing you all of the alerts that actually fired for that stock during that 5 minutes, here is the entire filter list with all of our filters, with what all the min-max settings were during that 5-minute period. So, you know, this is a really cool conduit to help you look at a chart and attempt to reverse engineer it into a productive alert or top list window that you can actually use.
Mm-hmm.
All right, we're just about out of time here. Yeah. So since Scott's not here, we have to make sure that we show you guys some coupon codes to thank you guys for showing up and listening to Steve and I prattle on like we do. So let's pull up these slides here. So just want everybody to know that we're a subscription-based service. So these are our monthly and annual rates. So, you know, anybody can sign up and pay 99 bucks a month recurring, get that basic service. So you'd be paying just a little under 1,200 bucks a year if you just went monthly. If you prepay and do an annual membership, you get a significant discount of $888 per year. Now, all the technology that we showed you today with the price alerts, that is part of the AI strategies. So the AI strategies include Holly, access to our backtester, the odds maker, and the limit alert functionality. And that's an add-on. It's usually a one-time license fee of $1,100. However, we've got some coupon codes to thank everybody. So if you use the coupon code Holly30, that allows you to either save 50% off your first month or 20% off an entire year, so you're paying $710 as opposed to $888, or it'll save you 30% off the lifetime AI odds maker license, which includes the limit alert functionality as well. So you end up paying $770 instead of $1,100, which is a really good deal. And then I think Scott goes even one further here, where the biggest thing is this. Holly 30 also gets you this package, which is a full year of TI, along with free training and lifetime access to the AI channel and odds maker. So if you don't have any package at all, this is really where you can get the most bang for your buck. You can go to this bit.ly link right here. Keep in mind this is case sensitive, and use the coupon code Holly30 at checkout. That'll knock 508, so off the pretty close to $2,000 price. You end up getting everything and a year prepaid for $1,480. All right, everybody. Want to thank everyone for taking time out of their busy day to come and listen to us today. Steve, anything, any parting words of wisdom?
Yes, Tisha Tyson is very good. I'll take full responsibility for that typo. Friday is April 1st. Correct. Thank you for correcting me on that. I was the one that had Jamie put down March 31st Friday and didn't check my calendar. So thank you for that. And these codes are good through April 1st through tomorrow.
Absolutely. So thank you, everybody, for coming. This will be recorded and uploaded probably in a couple of hours. So happy Friday, and I wish everybody a profitable day. Thank you very much.
All right. Thanks.